Hello and welcome to Market Watch for the beginning of the week of the 23rd of October 2017. Very quickly, the only things I'll highlight outside of Australia, you do have the Bank of Canada meeting this week. Considering that they did surprise the market at the start of the year with a rate rise, they're always now an interesting thing to look at, along with the ECB. And the reason I highlight the ECB, they will start their balance sheet movements this week. It's a question of whether or not in their press conference and in their statement, they actually also talk about normalising their monetary policy. We know where the RBA sits. They are clearly trying to point out that they are different. They are not going to follow their global peers. But again, all of that is why this week's a little bit interesting from the central bank point of view. But in the main, I really want to concentrate on the big part of this, which is inflation. Wednesday is the big day, and the reason I really point this out gets back to the RBA. It's still their number one mandate. Inflation needs to be between 2 and 3% on a trimmed mean basis, and I nearly highlight that deliberately because this is why at the moment it's very hard to sort of see any form of movement from the RBA at all. So I want to go back and have a look at what's been going on over the last several quarters. And as you see with the chart on screen, you've got trim mean there, you've got the core mean number as well. Those three levels and the weighted as well, those three levels clearly show you one thing, that inflation's trending lower. Not only that, we're a reasonable way away from that 2 to 3 band. And even if we were inside it, I don't think they'd actually start moving rates until it hit 2.5%, let alone just touching 2. Now the question is whether or not they start to move that mandate down. Again, I'm not sure they're going to do that with what's going on and how finely poised the market is. I also want to have a look at this chart here. It clearly shows you that if you remove housing on a core basis, that inflation's really, really flat. Disregard the tobacco and disregard the alcohol and also food and fuel. That there clearly shows you why CPI is reasonable, but those are fairly volatile events and they are core means that you don't need to look at. You want to look at things like education, you want to look at health, you want to look at consumption, you want to look at fixed income movements outside of housing. All of that shows you very clearly. If you strip out housing out of this chart that's on screen, it will therefore show you that inflation just really is not really materializing in any form of means. So what does that mean? Let's have a look at what's expected on Wednesday. The numbers I really want you to look at are the trim mean numbers that are there. The quarter on quarter currently is expected about 0.3 of 1%. That's weaker. And if you have a look at the actual year-on-year number at 1.8%, that's down from the quarter before. Now that's just the estimate at this point in time. It may change ever so slightly before leading that number on Wednesday, but that is still 20 basis points away from where we want to be. What it also therefore lead into is, again, the RBA perspective of this is that they are just not seeing a materialization in wages, and that's their big caveat along with inflation around why they are very, very neutral. And that's why this number is really, really key to not just what you look on an economics point of view, what it actually means on a macro thematic trade idea. It feeds into everything. It feeds into, therefore, looking at discretionary and whether or not there's an impact because discretionary just isn't able to expand on price and therefore isn't seeing any form of increased return. We know they're under pressure already. They're telling us that in business confidence. You also want to have a look at it from the other side. Look at things like construction. If the housing market does start to slow down, and we are seeing signs that that's the case, you therefore will start to see inflation ease off as well. Because as I said, housing is the reason we've been doing relatively okay on the inflation side. That if they start to wane, who picks it up? And again, wages are the key point there. People aren't going to be buying big ticket items, even housing, if their wages aren't expanding because they just cannot justify the kind of mortgage they're picking up. So that's why this week it is all around CPI. And I would therefore really get you to get all over it, really look up in terms of what happens on Wednesday and what therefore means feeding into the RBA going forward and what it means for the macro economy here in Australia going forward as well.